Trading in the Zone by Mark Douglas. But wait, have you ever felt like your biggest enemy in trading isn't the market but yourself? Imagine Sarah, a bright and diligent trader. She'd meticulously analyze charts, devour financial news, and have a seemingly foolproof strategy. Yet, time and again, she'd snatch small profits out of fear or hold on to losing trades with false hope that the market would just turn around. One day, after a particularly painful loss, she slammed her laptop shut, utterly defeated. "Why does this keep happening to me?" she said, the frustration palpable. Sarah's story isn't unique. In the high-stakes world of trading, mastering your mind is just as crucial, if not more so, than mastering market analysis. This brings us to the best-selling book titled Trading in the Zone by Mark Douglas, a groundbreaking book that dives deep into the psychological barriers that prevent traders from achieving consistent success. Douglas argues that the key to profitable trading lies not in finding the perfect strategy, but in cultivating a winning mindset. Now, let's get started with Section 1. The illusion of control and the randomness of the market. My early days in the trading wilderness. The year was 2015. The digital trading landscape was a far cry from what it is today. Online resources were scarce, and finding a mentor felt like searching for a mythical creature. I, armed with a mix of naive optimism and a burning desire to conquer the markets, dove headfirst into the world of trading. I remember my first trade vividly. It was a small position, but the rush of adrenaline as the price fluctuated was intoxicating. I felt like I was in control, a master of my own financial destiny. Every tick up was a victory, every tick down a personal affront. I meticulously analyzed charts, devoured every article I could find, which, back then, wasn't much, and crafted what I believed were foolproof strategies. But the market, as I soon learned, had a cruel sense of humor. My attempts to predict its every move were met with humbling defeats. I'd snatch small profits out of fear, only to watch the price soar higher. I'd hold on to losing trades, convinced they'd turn around, only to see my capital dwindle. The frustration was immense. I felt like I was playing a game where the rules were constantly changing, and I was always one step behind. There were nights I'd stare at the screen, a knot of anxiety tightening in my stomach. The feeling of wanting to control every outcome was overwhelming. I believed that if I just analyzed harder, strategized better, I could bend the market to my will. The reality, however, was that the more I tried to control, the more elusive success became. It was a vicious cycle of hope, fear, and disappointment. Looking back, I realized those early struggles were invaluable. They forced me to confront a fundamental truth about trading. The market is inherently unpredictable. My initial desire to control every outcome was a recipe for disaster. It wasn't about being right on every trade. It was about understanding probabilities, managing risk, and cultivating the discipline to execute my strategy consistently, even when faced with uncertainty. It was the beginning of a long and arduous journey toward trading in the zone. One of the first hurdles Douglas tackles is our innate human desire to predict and control everything. We look for patterns, try to anticipate every market move, and get frustrated when the unpredictable inevitably happens. But the market, Douglas emphasizes, is fundamentally random in the short term. Any trade has a probability of success, not a guaranteed outcome. Think of it like this. Flipping a coin 10 times doesn't guarantee 5 heads and 5 tails in that exact order. Each flip is independent. Similarly, even with the best analysis, each trade carries an inherent uncertainty. Accepting this randomness is the first step towards trading in the zone. Section 2. The importance of probabilities and edges. I heard you said, "So, if the market is random, how can anyone make money consistently?" Douglas explains that successful traders don't try to win every trade. Instead, they focus on identifying and exploiting edges, situations where the probabilities are in their favor over a series of trades. Your edge might be a specific technical pattern, a particular market condition, or a statistical anomaly you've identified. The key is to understand your edge and to execute your trades consistently whenever that edge presents itself, without letting emotions like fear or greed interfere. For instance, have you ever felt your heart pounding as a trade moves in your favor, the numbers on the screen flashing green, and an almost irresistible urge to take more, to squeeze every last pip out of it? Or perhaps the opposite, a cold dread creeping in as a trade goes against you, and a desperate hope that if you just wait a little longer, it'll magically turn around? If so, you've experienced the powerful, often destructive emotions of greed and fear in trading. And as Mark Douglas brilliantly explains in Trading in the Zone, understanding and managing these emotions is paramount to your long-term success. The market is random, and you will make wrong predictions as a trader, no matter your trading strategy or your analysis skills. So you need to learn to respect the market. Section 3. Thinking in probabilities. Trading, as we have already mentioned, it is all about probabilities. This leads to a crucial concept: thinking in probabilities. Instead of focusing on the outcome of a single trade, which is inherently uncertain, you train yourself to think about the long-term results of consistently applying your edge. Imagine you have an edge that gives you a 60% chance of winning each trade. In any single trade, you could still lose. But over 100 trades, the probability suggests you'll likely come out ahead. Embracing this probabilistic mindset frees you from the emotional roller coaster of individual wins and losses. Section 4. The pain of being wrong and the fear of missing out. FOMO. Two powerful emotions that derail traders are the fear of being wrong and the fear of missing out. The fear of being wrong can lead to hesitation in entering good trades or holding on to losing trades for too long, hoping they'll turn around. FOMO, on the other hand, can drive impulsive and poorly planned trades, chasing after perceived opportunities without proper analysis. Douglas emphasizes that being wrong is simply part of the game. Every trader experiences losses. The key is to accept losses as the cost of doing business and to have predefined risk management rules to limit their impact. As for FOMO, it stems from a scarcity mindset, the belief that you must catch every single profitable move. A disciplined trader understands that there will always be more opportunities and develops patience to wait for his predefined setups to form before he jumps into a trade. The biggest mistake I see many beginner traders make is they think waiting for a setup is hard, and somehow they throw away their patience and rush into the market based in some random pattern formations. Well, profitable trades are rarely the results of FOMO entries. What do I advise you to do then? Develop patience, follow your strategy, and don't allow the fear of missing out pushing you to be making impulsive trading decisions. Section 5. Developing a winning mindset. The 5 fundamental truths. Douglas outlines 5 fundamental truths that form the foundation of a winning trading mindset. Truth number 1. Anything can happen. This reinforces the concept of market randomness. Expect the unexpected. Truth number 2. You don't need to know what is going to happen next in order to make money. Your edge gives you a higher probability of success over time, regardless of any single trade's outcome. Truth number 3. There is a random distribution between wins and losses for any given set of variables that define an edge. Embrace the inevitable sequence of wins and losses without letting it affect your confidence or discipline. Truth number 4. An edge is nothing more than an indication of a higher probability of one thing happening over another. Understand the statistical nature of your edge and trade accordingly. Truth number 5. Every moment in the market is unique. Avoid letting past experiences or biases influence your present decisions. Approach each trade with a fresh and objective perspective. Section 6. The importance of discipline and consistency. Ultimately, trading in the zone is about cultivating unwavering discipline and consistency in applying your trading plan. This means sticking to your rules, managing your risk effectively, and detaching your emotions from the outcome of individual trades. Following your trading plan, using stop-loss orders, and recording your trades could save you from unnecessary headaches. When you can trade with a mindset free from fear, greed, and the need to be right, you enter the zone, a state of mental clarity and focus where you can execute your strategy objectively and consistently. Section 7. Practical steps to achieve the zone. While trading in the zone delves much deeper, here are a few practical takeaways to start your journey towards a winning mindset. Number 1. Define your edge clearly. Understand what gives you a statistical advantage in the market. Number 2. Develop a detailed trading plan. Outline your entry and exit criteria, position sizing rules, and risk management strategies. Number 3. Accept the risk. Understand that losses are an inherent part of trading and be comfortable with the amount of capital you're risking on each trade. Number 4. Predefine your risk on every trade. As I have already mentioned, use stop-loss orders to limit potential losses. Number 5. Focus on the process, not the outcome. Concentrate on executing your plan flawlessly, regardless of whether a particular trade wins or loses. Number 6. Monitor your mindset. Be aware of your emotional state and take steps to manage any negative feelings that might cloud your judgment. Number 7. Review and learn from your trades. Analyze both your winning and losing trades to identify areas for improvement in your strategy and your psychology. Trading in the zone is more than just a book. It's a guide to transforming your trading psychology. By understanding the nature of the market and mastering your inner game, you can move from being a reactive, emotionally driven trader to a calm, disciplined, and consistently profitable one. It's a journey, not a destination, but the rewards of trading in the zone are well worth the effort. Thank you so much for watching our video. If you'd like to help us grow this channel faster, please consider sharing this video with someone who might need or enjoy watching it. Love you and love trading. See you in the next video.